Hello dear traders, today is Tuesday, December 21st, and as usual I'm online again with a fresh market review prepared for InstaForex. Gold has proven its status of the most reliable asset against inflation. This statement has been confirmed by the chart, so we cannot say this about cryptocurrencies. Meanwhile, Bitcoin is trading at near moving averages, pleasing those who rely on technical analysis. The US stock market is trading slightly lower in the meantime. However, I believe in the bullish outlook for stocks. As usual, we begin with gold. Yesterday, my idea was planning long positions on this trading instrument. Let me remind you about the nice impulse that was triggered by the Fed's policy announcements. Since then, the price has retraced to the 61% Fibonacci level. If you are also a hunter for stop orders like me, you probably dream about 1816. This is a perfect target. If you bought from 61% Fibonacci level, you should have already been with gains of 100 pips. The main profit will be 270 pips. Perhaps gold will suggest better prices for long positions at 50% Fibonacci level. If it happens, you may add more long positions. The price has been developing according to a three-wave structure. I guess this is a realistic scenario in the time ahead of Christmas. The market might rally or create dangerous conditions that could activate stop orders. Silver is following the gold trend. Platinum is also trading higher. The metal made the best jump in light of the Fed's policy meeting. The same is true about Palladium. From my viewpoint, Palladium is the most lucrative investment in terms of the weekly time frame. The metal closed last week with a pin bar. That pin bar was in the zone of awesome prices at near 1,500. Notably, the instrument used to shoot to 3,000 a few times. The euro-dollar pair is walking a tightrope. The pair causes a lot of troubles for traders, including me. Nevertheless, there are preconditions that the pair will eventually resume growth. Yesterday, the price made an inner bar. The price didn't update any lows. I see lots of stop orders up and down. All these orders will certainly be activated before the new year. Someone will earn, but someone will lose. Let's consider the chart of a senior time frame. The euro-dollar pair has an interesting stop order level at 1.1160. I don't use its terms of support and resistance because I don't believe in them. This is the level of 2020. The low of this year is very close to it. All those who bought and sold the pair are now trapped in this zone. Their risks are beyond the borders of the channel. They are facing the challenge of how the price will exit direction. I mean, in what direction? It could be either upwards or downwards. There is a 50-50 chance of any scenario. We have been anticipating the upwards exit. Yesterday, Americans were selling the pair, but it has regained losses of the previous day. I have seen a lot of selling American sessions since the US non-farm payrolls on December 16th. After the Fed's meeting, Americans were selling again. The same happened on December 17th and yesterday, so 3 sessions. Today, European traders were buying the pair. If Americans decide to buy today, the instrument will rocket. If the pair exits the range upwards, it will be great for those who bought it. I'm keeping some positions, but I closed 2/3 of them because of the bearish engulfing on Friday. If you are a cautious trader, you can wait until a breakout upwards. So you may hunt for the lower border down to the level of the Fed's meeting. You can take 200 or even 300 pips. There is also a possibility that the price will exit downwards. Everything happens, hence you can expect an upward move and take almost 300 pips. It's tricky to trade inside a range. The currency pair has been on a range-bound market for a long time. I have tried to enter the market with tight stop orders a few times, but my positions were closed at break-even. Traders wonder why the euro-dollar pair is trading in this way. The market is looking forward to the USD to clear up market sentiments. Besides, no one wants to open large positions ahead of the new year. Traders want to avoid pre-Christmas turbulence and play safe. This week is the final one before Christmas and the markets will be closed on Friday. One thing is certain, both buyers and sellers will see their stop losses triggered. The pound-dollar pair is showing wonderful moves. The sterling secured the key level of 1.31674. I think this happens because the representatives of the Bank of England watch my reviews for InstaForex. I have told you this is the right time for the pound to strengthen to 1.47. Well, the British policymakers are probably discussing that the sterling retraced to 61% Fibonacci level against the greenback and it should be stronger. They are interested in the stronger national currency. These trading instruments often leaves nice levels and never returns. Seriously, if you are holding positions, just leave the market before the price breaks such levels. In fact, a breakout might never happen. I'm showing you this mega level which the currency pair has been hitting for the whole December. Even after the Bank of England rates hike, the sterling didn't break this level. Let's watch this trading instrument, it's amazing. This trading week is shorter than usual because of the long Christmas weekend. I enjoy the Christmas story cartoon, it's very lovely. By the way, analysts at InstaForex don't work for only 2 days, on Christmas and on January 1st. That's all for today, see you next week, bye bye.